Hello, this is Victor Santana with Stock Hunter's weekly video for July 19. How's everybody doing? Hope everything's going fine. Let's go ahead and take a look at what the market's been doing. And as you can see here, we are looking at the total U.S. market, ETF TMW. We're looking at a daily chart here going back 3 months. And as you can see here, this red line representing the 200 moving average, the bluish line representing the 100, the black line the 50-day moving average, and the green line the 18-day moving average here, followed by down here with this indicator here, this MACD with the histogram here. So that's basically what we follow here, along with one other indicator, but I don't have that shown up here. But let's go ahead and take a look and see what's been going on. Well, we had that upward swing here, and we got a sell signal here as of Friday right there. So we've come down, and now here we are on Monday forming a little green candlestick here. Based on our other indicator here, it seems like we may be going to trade sideways for a little while, bouncing around in this area. So the longer trend still kind of on the downside. So this will probably be a good time to start adding some shorts down here with the total U.S. market here. So let's go ahead and break it down into the individual indices here. Let's start out with the Dow. The Dow here, as you can see, it's also had this sell signal generated as of Friday, and here we are Monday, and bouncing around, probably going to be between these two lines here, and it seems like we are going to have some sideways action for a little while, for a few days, maybe this week, and maybe making the next lower low here. We don't expect it to break higher than this 200-day moving average here. As you can see here, we had the crossover of the 18 and the 50, giving us a downward trend signal here. So now the trend is downward until we get that cross and confirmation. Then for now we're going to be bearish. Now let's go here to the S&P, and we also got that generated at that crisscross here, this signal here of the 50 and the 18-day moving average. We have gone down, and we've generated a sell signal here on Friday as well, and with another bar going down here. Again, we probably going to get some sideways trading between this line here and over here. I don't think we are going to break any higher than up in this area here. And let's look at the Nasdaq. Nasdaq, we had the crisscrossing negative bear camp here back in May, and we continued down. We had that signal here to start getting out, and we've gotten this green candle here, histogram here, or excuse me, the MACD is on the overbought territory here, now trading downwards with the red candle or the red bars here. So it looks bearish here. Also, we may get some sideways trading here. And let's look at the Russell's 2000, a riskier money. And as you can see, we've already crossed over under. We are showing red bars, and this had a smaller candle here. Looks like a shooting star or hammer type. So this one has more to go on the upside. We do expect it to probably go up around in this area of the 62.55, or even as high as 63. That's what it seems like we may be getting in this area. Put our sell stops as far as shorting right here, 64.45, just or maybe just a little bit higher in this area. So again, we're still getting lower lows on this, so still downtrend. And then now let's go at global stocks. And as you can see with the global stocks, we've also had crossover back in May, big downturn here, and now we're coming up in this area here. The MACD is crossed over here, headed downward. The negative red bars here, so this is the time to get out. We still have some way to go down in here, or we may get a bounce here. If the global will lead the markets up, we may even get up to the 56 area here before we get some resistance up in this area. Not too likely, but if we do, don't be surprised. But it still looks bearish here, so I would continue with our short positions here with the inverse ETFs here, and we'll just have to wait and see how things turn out over here with this. So other than that, we do see agriculture ETF. Let me pull this quickly up so we can see that, and here we go. We got the crossover back here in May along with the whole indices here. However, back in July we got the crossover and continued up here. So you can see we're pretty much oversold in this area. We got the negative, so we're going to wait until this comes down and consider getting in. So we're going to put this in our watch list here if agriculture is going to continue to go up here. So this is not ready to get in, but it is a possibility. Another one here is solar energy, solar stocks, and let me pull that up here. And did this one get way over there? Let's bring this bad boy here. Here we go. So we got the crossover here in May. We got a positive crossover now, recent in July. We are overextended this area, so we're going to keep an eye out on this one here. If we can generate another positive bar, it may be considered to get in, but we'll just have to wait and see. Overall, we may hit some resistance up in this area, so but that's part of trying to be in these emerging trends here. So, and then the last one that I want to point out is the emerging markets. That's why, well, global is going to lead the way. Emerging markets might be a good way to get in with the ETF. Again, the trend has gone down back in May, and now we got a crisscross over here in July, and we got the upswing now getting down. So if we can come down here, it may be worth getting in for a low risk entry. And as you can see, we have support line here, so if we hit down here, we can get in and put our stops here down by here. So that's pretty much it for now, and other than that, I hope everybody has a great time, and keep our eyes on the markets so we could be on the right side of the trend. So take care.